Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Hello, Jim.
President Trump's top economic advisor, Gary Cohn, has decided to pull the plug. Why did he do it, and is that good or bad news for Canada?
Well, I think we should start by remembering that Mr. Cohn wanted to be the Fed chair, right? He was vying for that position on Janet Yellen's departure, and he didn't get that gig. So that's the first thing. The second thing is that Mr. Cohn's a lifelong alumnus of Goldman Sachs, and his infiltration into the White House as the key economic advisor to the president was always a dark day, in my view, for the change and actual improvements that need to go on in terms of government and business climate in the world right now. So it was always something that I saw as a negative, having him in there advising. And then, the fact that he didn't get the gig at the Fed, that would have been probably even worse if he'd have got to have that fait accompli and become the figurehead of monetary policy for the United States. But I think ultimately what you have to understand about the big banks and Goldman Sachs being the most successful of that category is that they have become gazillionaires on this whole globalization thing the past several decades. So the more that big corps became global trade partners and the movement of goods and services around the world, the more they needed financing, the more they needed transactions, the more they needed securitization, and this has been how these big banks have made their fortunes. So they were always going to be, advocating on behalf of globalization, but not for all the, soft or noble, laudable causes that they espouse it, like helping workers. I think that's absolute rubbish. I don't think it's got a thing to do with workers. It's always got to do with helping big corps keep their profits. And big corps have profited greatly from the globalization wave. They have been able to increase their profit margins remarkably. They have been able to, offshore their production and labor over the past several decades. And then not only that, but they've been able to keep their profits once made offshore in literally tax favorable zones or no tax zones. They've been able to avoid having to pay their taxes at home. They have really been able to funnel funds straight up to the executive C-suite and the largest shareholders. So all that may sound wonderful, except it's come at a great cost, right? And we've seen this so often with the impacts on the real economy. So not only has it meant that, they've done a production in countries that have lax regulation of every kind, including labor, including environmental standards, which in the big picture just pollutes and destroys the earth faster, and then, but none of that is accounted for in their expenditure or their expenses when they do this stuff overseas. And not only that, but then they were, the whole problem here, when he talks about the trade deficit, when Trump says, we have to stop this gaping trade deficit, the reality is that I agree with him, but for completely different reasons than he's saying. So it's been going on for 35 years. It's been getting bigger and bigger. The real culprit driving this is that the United States has been spending more than it's been saving, more than it's been investing in domestic productivity and enhancements at home. So really, if you think about it, the biggest trade deficits, well, its largest trade deficit, some 3/4 of its trade deficit is actually with China. And China came into the World Trade Organization, if you recall, at the start of the 2000s, was a full member by 2002, and that really accelerated all this, the growth of the debt in America, and it's connected to that trade deficit. So you get the cheap goods produced in countries like predominantly in Asia, but other countries as well. Mexico has a significant trade deficit with the United States as well. So you've got cheap goods, cheap labor being produced in countries where they don't have full cost accounting of the environmental impacts, et cetera. And so the money that is earned in those countries, the wages that is earned, they have low household incomes, they have poor consumption ability, so they tend to just park their increased savings, or the revenues that the governments get tend to be recycled back into U.S. Treasuries, because that's what they're getting their income in, and they park the money in U.S. Treasuries in the U.S. dollar instead of, converting it back into their home currencies. And what happens is it had the effect of lowering rates for the last 30 years, and that allowed America to spend more at every level, both on a household, on a corporate side where all this financialization has gone on, where they have, as I say, have these excess profits overseas, nothing better to do with them than to put them into financial speculation and assets rather than invest them in any productive pursuits. And so debt on corporations went up, debt on households went up, debt on the government went up. And so absolutely it's an unsustainable trend. And I fully agree that we need a disruption of the status quo. And when Trump came in, you may remember, Jim, I said that I was not a fan of him, the man, but I thought that it was important that we had a complete disruption of the status quo forces which had been in effect for about 30 years. So I don't credit him, the man, with great genius, but I do think that this will shake up new ways of doing business, new allegiances. I do see the exodus of Gary Cohn as a positive. Now, there's many more bankers and financial sector executives that are all around the Trump presidency. I don't think this is going to clean house by any stretch, but it's a tiny step in the right direction. And they really can't go on with this ridiculous financialization and buybacks of shares, which, Cohn got through the tax package, which really just funneled more corporate profits that were already at record highs back into financialization. So completely unsustainable trends. But, if you look at Canada's downside here, we don't have a huge deficit with the United States. We have like an $18 billion deficit. So we're a tiny player in the numbers here that they're, pointing to. And we do buy a good deal of stuff off of America as well. We are their second largest trading partner. So I think Canada has less to lose here than some of the, as I say, the Chinas and Mexicos of the world. Even Germany has a pretty decent sized trade deficit with America, mostly due to cars. But, so these are all, it's a bit of a mess, but I do think disruption and change is essential. And that seems to be the order of the day right now, is shaking up the way things have been done. The question is how better to replace them. What are the new, smarter ideas? It's easy to break everything apart. It's much harder to come up with more intelligent ways to do things.
We'll have more with Danielle Park right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Danielle Park. Danielle, the Fraser Institute, a right-wing think tank based in Vancouver, says that women who live in countries that have high levels of economic freedom live longer, healthier lives by quite a bit. What's your opinion on that?
Economic freedom, interesting concept. I wonder what that includes. Certainly we know that women that have education and access to birth control tend to have higher income ability and more ability to make their own life path, and that they tend to have lower birth rates and they tend to have more fulfilled lives. It tends to be better for the nation's government, equality, human rights, all that sort of thing. I'm not sure what they're including when in that category when you say that they have, what was the term, better economic freedom? Is that what you said?
Well, some of the terms here, I can read just a little bit of the study done by the Fraser Institute. Higher levels of economic freedom, the ability of individuals to make their own decisions about what to buy, where to work, whether to start a business or engage in trade, dramatically improve women's lives around the world. And they point out, for example, something like 19 countries, a woman needs their husband's permission to get a job. More than 80% of women have bank accounts in economically free countries compared to just 25% in countries with low levels of economic freedom. So just things like getting a job or adult literacy. Women in countries that have high levels of economic freedom are much more literate. And, of course, with literacy comes education, and education can lead to greater financial stability.
Well, there's no question that when you look at these top-heavy models that I was just speaking about, where the siphoning of all the profits are going up to the transaction organizations in the world, the financial organizations, the global trade, the squeezing of profits to a tiny fraction at the expense of everything else, including the workforce, including, the infrastructure, the sustainability, all that. So when you look at that, you really have to figure out, we can't keep doing more of that. Sucking everything up to a mothership and leaving everyone else weaker for it is not a sustainable model, and we've been going a long time. We can't keep adding more debt when people are already drowning in debt, as an example. So we really need to look at ways to get a true movement of capital and sharing of principle through a greater swath of the economy and through a greater swath of households and workforces. And certainly one of the most intelligent things, if you want to increase household wealth, would be, for example, just to pay women the same amount of money that men are being paid. Now, in many countries, that is not the case. Even in, the developed world, that is not the case. Women are still making significantly less, in some cases 20% more less than men doing the exact same job. So a no-brainer here would be to you just not allow those policies anymore and make sure that you have true pay equity, as an example. And as I say, also in developed countries or in countries where women have access to birth control and education, you're going to have much more upward mobility. And the statistics and studies of all kinds have confirmed that that is the greatest way to increase prosperity in the economy and society as a whole. So absolutely, sharing of resources and opportunity brings up everyone in the process.
We'll have more with Danielle Park right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. A recent poll and study found that millennials now are more likely to be taken in by Ponzi schemes and other fraud than older people, which used to be the case traditionally. What's your feeling on that?
Well, I wouldn't be surprised by that. I think that people in general have been sold a very self-destructive way of looking at financial matters and get-rich-quick schemes, and this has come down right from the top. This is from not just from the fringe groups. This is from the mainstream. As I said, the Goldman Sachs of the world, inside governments, inside the central banks. The banks in Canada having access to all levels of consumers, and the propaganda that comes down from the financial sector about what you should be doing with your savings to try and, get rich, so to speak. You're richer than you think. All these heavily destructive messages that we're just pounded with day after day after day. So I think that it wouldn't be surprising that younger people have misinformation or self-destructive ideas about what to do with how to make financial choices, how to manage their debt, how to manage their income, their expenses, what an investment looks like. I mean, we're living in the everything bubble today, Jim. Everything is extremely overvalued thanks to all these, as I say, decades of bad debt and stir and incredibly aggressive financialization. So it's not surprising that all age groups are struggling to find, intelligent things they can do which will actually support their net worth and their financial stability in the long run rather than just a quick buck in the short run. So I see evidence of this across all age groups. I think that in some cases, I think the pendulum is swinging back here. I'll give you an example. So, for example, the smartphone craze, how everyone's become addicted to their smartphones and gone to the extent of now increasing the death rate on the roads from a trend that had been falling since the 80s has been rising again because people are more intoxicated, if you will, on their smartphones on the highway than they ever were on alcohol, and it makes them extraordinarily dangerous. But I think we're at a point where people's relationships, this is no longer about connecting with each other. This is about isolation and missing the now and missing your family and friends in real time because you're obsessed or addicted with applications on a digital device. So that pendulum, I think, is going to swing back towards, I saw the introduction of something that they literally called the dumb phone, which is a simple little device that fits in your pocket and can text and get phone messages. That's it. So none of this, Angry Bird games or whatever it is people's brains are capsized by on their smartphones. So I think we're going to move back away from this fascination with all the things on phones to a much more simple approach so that people can get grounded again in the now. Same thing with globalization. Went to an extreme, unsustainable extreme, top-heavy pyramid, right? Now we need to figure out ways to shore up the base again, bring capital back in, waste less, save more, spend less in many cases in order to have higher efficiency. And the exact same thing goes with, these Ponzi-like schemes that we've seen over the past many years, like so many. And I think that people are starting to slowly wake up and say, how do I get the right advice for me? That's not about someone selling me stuff or trying to, take advantage of me, but what would be an intelligent thing for me to do at this particular life stage? And so I think, once the bubbles burst again in the next bear market, you're going to see people, I think, have a revulsion away from this obsession with get-rich-quick stuff and Ponzi's again, and go back to trying to build their foundations on solid footing. So that will be healthy, even though it'll be disruptive, as we say, in the near term, and potentially quite terrorizing for some people that aren't prepared for it.
What are some of the warning signs that you might be stepping into a fraudulent scheme?
Well, they're so clear. Here's a simple way to know. GIC rates or government bond rates in Canada right now, as an example, are 2% and less, in that range. So that would be what you'd consider the risk-free rate. Okay, so the risk-free rate is 2%. If someone is telling you about a product or idea where the yield or the gain is multitudes of that, right? Is 6, 8, 10, 12. I mean, people promise 20% overnight and all these insane things. That should be a red flag to you that this is an extraordinarily risky proposition, right? So the first thing you have to do is don't be a greater fool. Don't believe, in magic solutions. If someone is telling you a rate of return or an opportunity is going to pay you a quick return of X, and that's significantly higher than the risk-free rate, then you should use that as a great cautionary warning, and you should take it to someone who's not paying to sell you that and start to get another opinion at least, or do some more research to try and figure out, why this is being so lucrative or such a can't miss offer in the context of the financial climate that you're in.
Danielle, thank you so much for chatting with us.
Hey, thank you, Jim.
My guest has been Danielle Park, president of Venable Park Investment Council Incorporated, her popular blog, Juggling Dynamite. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. You can also contact us with questions for our guests or ourselves at info@HowStreet.com, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.